Volatility is market's friends, essentially, right? It's when trading firms and risk managers and risk intermediators can really get down to doing their stuff, the stuff they're good at. More market swings, more mark-to-market moves in their portfolio, potentially higher and more frequent initial margin calls. It just increases the velocity of collateral movements across the industry. We process trillions of dollars every year in margin calls for our clients. On one particular day where there were some market spikes, we did $20 billion of collateral movements in one day, and hundreds of thousands of margin calls. And we're just seeing that trend shift upwards, not necessarily just because our clients are growing now, right? We've got 220 client groups on the platform, which is exceptional for our business. The more clients, the more margin calls we have, but actually the size of those margin movements are increasing as the market just proves to be more volatile.
What are the key drivers behind your growth?
A lot is to do with the markets and the market volatility that we've had over the last few years has definitely been helpful to our cause. As painful as it's been to the consumer, it's very good for us. You only have to look at kind of bank earnings to see that kind of the risk intermediation businesses across the derivative landscape, whether that's futures or OTC products, has been exceptionally high. Returning to kind of the record revenues of the past. And we're a beneficiary of that volatility, more margin calls, more stress in the system inside organizations that, quite frankly, aren't equipped to deal with that level of volatility, that level of risk. If we look back, it is a 10-year anniversary, and you look back 10 years, the birth of CloudMargin was really because of a huge amount of market volatility followed by regulation from the financial crisis, right? That's really what spawned the concept of CloudMargin, just being a modern technology, SaaS platform, cloud native, bring that to market and allow clients to have, high levels of transparency, high levels of risk management. The market environment today has been very helpful. Somewhat jokingly, the disastrous 40 days of the Prime Minister we had in the UK, Liz Truss, was actually, created a gilt crisis. That gilt crisis created a lot of opportunity and a lot of tailwind for our business as well. So that kind of market volatility is just really good for our business.
How important is the tech stack in collateral management?
Collateral management as a theme, as a concept, is important for your overall risk management, right? If you are in the business of trading, products and collecting the appropriate margin and being able to actually do so because the platform you are using is up, it's running, it's working, it's doing all the things you need it to do, it's doing the risk management things, it's looking at all your concentration limits, it's managing your entire exposure. That is not easy to maintain, and I can tell you that, right? The uptime of our platform at 99.98%, right? That is a difficult thing to do, but it's critical because we provide a critical piece of market infrastructure to our client. Without us operating, they are exposed to huge counterparty risks, and we all know, and I certainly know from living through it in 2008 when I was working at Goldman, the loss of Lehman Brothers creates a massive shock event. And if you are not collateralized appropriately against that, you can face very severe losses. And those very severe losses can cause a catalog and a domino effect of other defaults and be regulatory compliant in every region, right? So our platform is accessed in 52 countries today. To do that, you have to be regulatory compliant in every single one of those jurisdictions, right? And so we're kind of future-proofing clients' ability to adapt and always be compliant to the latest regulation as it comes along and evolves. We're compliant for them. And that saves clients lots of headaches and, by the way, a lot of cost.